Welcome to Woods of Stardon. This is CH. I will be covering the VanEck Space Innovators UCITS ETF that has the Bloomberg ticker JEDI in this video, which is part of my Absolutely Biased Comments or ABCs series. The aim of this series is to cover one fund per video to share how an individual investor can try to find out more about a fund from public sources and do some basic research or simple due diligence on the fund before deciding to buy the fund or walk away. Some quick disclaimers before we start. This is not a product sales pitch or a recommendation to buy. I'm not sponsored by anyone to do this video. Please do your own research and be clear about the product features and risks before taking any action. This video is done as a follow-up request from a viewer's comment in my previous video covering the VanEck Defense UCITS ETF. If you would like me to cover any funds or ETFs, do drop me a comment in any of my videos, and I'll be happy to work on it as long as I can find enough information on the product. There is a lot of hype going on with space investing this year, with the main attention on Elon Musk's SpaceX that is expected to IPO in June as the largest US IPO in history. As a result, there are various space thematic solutions being launched in the market in the recent months. To name a few of the US-listed ETFs, Thema launched NASA in March and has good success so far with investors' monies at over $1.4 billion of AUM as I am preparing this video. Global X launched ORBX in April, Corgi Funds launched DIPR in May, and VanEck launched WARP also in May. But space investing is actually not something new, and there are already solutions available in the market running for several years now. For example, Procure AM launched UFO in 2019, ARK Invest launched ARKX in 2021, and Spear Advisors launched SPRX in 2021 as well. VanEck actually has a UCITS ETF JEDI that was launched in 2022, way ahead of its US listed version. It also has the highest AUM of $2.4 billion among these ETFs that I have mentioned, so I do think it is worth taking a look at this ETF to find out more. By the way, some of these ETFs do have very catchy ticker codes to make it easy for investors to remember. VanEck's solutions, for example, are clear references to the popular Star Trek and Star Wars movies. VanEck is a US-based asset management firm founded in 1955 by John VanEck. VanEck has since the start been a thematic investment player, focusing on identifying new investment themes in the market and taking the lead to launch associated investment products, from gold investing to emerging markets to digital assets. VanEck today manages over $199 billion worth of assets across all types of asset classes, with equities slightly over half of the assets. Equities and commodity solutions have seen significant growth in assets compared to about a year ago. VanEck is best known for its ETF business, primarily US listed, but also in the recent years been expanding its Europe UCITS offerings. Besides ETFs, VanEck also provides to a smaller extent other mutual funds and private fund solutions, as well as other investment products. The VanEck Space Innovators UCITS ETF is a sub-fund under the VanEck UCITS ETFs PLC fund family. The fund family is set up as an Irish, open-ended investment company with variable capital, commonly termed as OEIC or ICVC, and covers a long list of VanEck ETFs meant to be offered internationally. The ETF is listed on multiple European stock exchanges for trading in various currencies, and JEDI is the Bloomberg ticker for the US dollar listing on the London Stock Exchange. VanEck doesn't provide manager information at fund level for the Europe-listed ETFs. There is a general investment team webpage that lists Aaron Rankers as the head of investments, who is the main person responsible for development and management of index replication and optimization strategies for the ETFs. The webpage also lists several other portfolio managers in the team that I will not elaborate as there is no fund-specific information available. The VanEck Space Innovators UCITS ETF tracks the marketvector Global Space Industry Screen Index, which is an index from marketvector. Let's understand a bit more about marketvector and this index. MarketVector is in fact an indexing business founded by VanEck in 2011 and was renamed from MV Index Solutions or MVIS in 2022. MarketVector differentiates itself from the big indexing players by focusing on thematic plays and lesser covered markets, and is used as a basis for VanEck's ETF business. The MarketVector Global Space Industry Screen Index tracks the performance of the largest and most liquid companies in the global space industry. The additional screen word refers to ESG criteria screening in the index. Let's get more details in the index prospectus. This is a pure play thematic index that focuses on companies with at least 50% of their revenues from 4 categories that are space exploration, rockets and propulsion systems, satellite equipment and communication solutions, and other satellite equipment. Given space investing is still a pretty new thing, I would imagine this list of categories to expand over time. The pure play is important, as some products in the market tend to throw in generic technology and AI firms that are not that relevant. ARKX, for example, has Amazon and Alphabet in its top 10 holdings. As with most indices, there is also definitions on market capitalization and trading liquidity requirements. Given the space industry is still relatively new, the index allows for a rather low market cap requirement of minimum $150 million US. There are also similar clauses for IPOs and SPACs. I believe all the space investing ETFs are eagerly waiting to get their hands on the SpaceX IPO. The index aims to cover 90% of the free float market cap of the eligible universe, with a minimum of 25 components. This minimum number of components should also increase over time as the space industry grows, but as of now, the index has exactly just 25 components. The index is rebalanced on quarterly basis. The index is weighted according to modified float adjusted market cap, with a maximum weight of 8% and a staggered down weight for the first 7 holdings. This means that even if the ETF adds in SpaceX that potentially has the largest market cap in this eligible universe, it will be capped at 8%. This keeps the index decently diversified in terms of single position concentration risk, although investors looking for larger bets in specific names may not like this. As mentioned earlier, the additional screen word in the index name refers to ESG criteria screening in the index. The prospectus provides an elaborate list of ESG screening that covers norm-based research, controversial weapons, sector exposure screening, and energy extractives as defined by ISS ESG. I won't be going through the list as this is not critical to the contents of this video. The index was launched in 2021, with data since 2020. The index fact sheet actually provides quite a lot of portfolio information, but I will be referring to the ETF fact sheet information later for better accuracy on what investors get. As mentioned earlier, the VanEck Space Innovators UCITS ETF is a passive index tracker that tracks the marketvector Global Space Industry Screen Index. As per the prospectus, the ETF would generally adopt a full physical replication approach by investing in all the index components with the same weight allocations where possible. In situations where full physical replication cannot be achieved, the ETF will adopt a representative or optimized sampling approach that invests in a subset of the index components, or with slightly different weight allocations, or even invest in stocks not in the index but can be used as a substitute. The ETF is expected to have an annualized tracking error of 0.20% or less under normal market conditions, which is pretty low. The ETF does have non-index specific investment constraints, in this case a max 15% in China onshore equities. There is also interestingly a mention that the ETF can invest more than 20% in emerging markets. I am not sure if there is a typo here and the sentence is supposed to mean a constraint instead, but this should not impact the ETF as most of the index exposures are in developed markets. Besides general portfolio management and currency hedging, the ETF can also use derivatives for investment purposes, particularly to substitute a direct investment, although I think this should normally not be required. Besides the usual fund documents, the ETF webpage also has one more white paper published last year that provides some elaboration on the space investing team and what makes it interesting right now. Citing third-party reports, the white paper indicates that the whole space economy is worth about $600 billion currently, with the potential to triple in 10 years' time. I am not sure how much hype versus calculated estimates there are in these numbers, but there is definitely an increase in space exploration news in the past year, plus SpaceX is really getting many people excited right now. The aim of this ETF and its underlying index is obviously trying to participate in this potential market growth by allocating to the most relevant players in this universe. The VanEck Space Innovators UCITS ETF was incepted in 2022, about a year after the underlying index was created. It is base currency in US dollars, and it is a European UCITS compliant vehicle, making it a more friendly product for non-US investors. The ETF has about $2.5 billion of AUM currently, and this makes it a market leader among its peers. While the index has a low market cap requirement for its constituents, the resulting portfolio is more mid-cap focused with a weighted average market cap of about $13 billion. Price to earnings and price to book ratios look spectacular because valuations for these stocks have been shooting up in the past 1 year. While many countries have started or preparing to start their space adventures, investors still have to look at US primarily when it comes to investable relevant companies. As such, US takes about 2/3 of the portfolio, and interestingly with Asia having a larger piece of the pie than Europe. Sector-wise, investors should not expect much diversification, as the relevant universe is still primarily industrials and technology companies. Basically, the hardware and the software behind the rockets and peripherals and equipment that will go into space. Sector diversification will only happen when the space exploration becomes more common and more mature. The ETF webpage provides the full holdings list of total 25 positions. With a concentrated portfolio like this, the index rule provides decent diversification by spreading the individual allocation weights so that each position looks meaningful enough in the portfolio. Many of these companies would be unfamiliar to most investors as they are focusing in the space domain instead of retail goods and services. The VanEck Space Innovators UCITS ETF comes in only one share class, that is A Accumulation US Dollar class. As this is a Europe-listed ETF, it is listed on multiple European stock exchanges and traded in various other currencies. The ETF has a total expense ratio of 0.55% per annum, which is considered normal levels in the market for thematic equity ETF solutions. The lack of distributions is not a bad thing here, as the underlying companies in the portfolio are all growth-focused companies, and the space investing team is a high-growth team, so this allows investors to fully participate in this growth story. The VanEck Space Innovators UCITS ETF or JEDI, provides a cumulative performance chart in its webpage that shows very clearly that the ETF and the index representing this thematic market is growing exponentially in the past 1 year. This is normally a concern, as such growth trend is not sustainable. But markets can remain irrational longer than what we expect. So let's see how this goes. The ETF webpage also provides performance tables of various time periods and calendar years. As seen, over 180% return in 1 year is not something to expect of normal equity markets. There are certainly market forces that can continue to drive this upward momentum, but investors should be aware that any corrections can be quite significant as well when they happen. Given the growth of the ETF and the index are moving so quickly, this also leads to a higher tracking error than the expected 0.2% mentioned in the prospectus, as the ETF will incur performance differences, handling daily subscriptions and redemptions, as well as when rebalancing the actual portfolio. Due to the high return in the past 1 year, JEDI has obviously performed much better than the broad global or US equity markets, as expressed by CSPX and ISAC in this chart. We can see the ETFs were actually having similar returns before 2025, so all the action only started last year. Here is a comparison chart of JEDI with UFO, ARKX, and SPRX that have the longer track records. As seen, JEDI has quite comfortably outperformed all the others during this period. Here is a since 2025 chart when the action started. JEDI and its underlying index is definitely doing something better than the others, extending its outperformance steadily through the months. Let's throw in NASA, the other popular ETF that was incepted only in end March 2026. Here, we are looking at a chart that is only 2 months long, so it wouldn't make sense to make any long-term assessments from it. Nevertheless, we can see NASA and JEDI having the closest performance correlation, and the two of them are leading the pack, delivering over 70% in just these 2 months. With that, let's summarize our findings. VanEck is a US-based asset management firm and a leader in providing thematic investment solutions since 1955, managing over 199 billion US dollars of assets currently. The VanEck Space Innovators UCITS ETF, or JEDI, is a pure-play solution investing into the space theme. It is a passive index ETF tracking the marketvector Global Space Industry Screen Index. The index is in turn created and managed by marketvectors, a leading index provider focusing on thematic exposures. Marketvectors is owned by VanEck, who uses this ecosystem to create and provide thematic investment solutions. Some investors may think there might be some conflict of interest here, but the solutions are simply passive index trackers, and I think this is a highly efficient way to create new thematic solutions without too many parties involved. The index is pure play and focuses on industrial and technology sectors that generate more than 50% revenue from space-related industries such as space exploration, rocket and propulsion systems, and satellite and communication equipment and services. It also has an 8% position cap to ensure portfolio diversification. The space theme is, however, still far from maturity, and the investable universe will certainly evolve over time. As of now, the index is mainly small and mid-cap stocks, with about 2/3 in US exposure. The ETF is a Europe-listed UCITS vehicle that comes with multiple trading currencies. This is an advantage over most of its peers that are US-listed vehicles, tradable in only US dollars. The ETF also has a decently long track record of about 4 years now, and has one of the largest AUM among its peers. The pure play strategy and diversified portfolio of the ETF have worked out well so far. with the ETF delivering notably better performance than most of its peers. The exponential growth trend of the ETF and its peers in the past 1 year is concerning. While there are sustainable long-term drivers in this theme, the hype around the SpaceX IPO is pushing excessive positive momentum. I would say congratulations to the investors who entered this theme last year and secured good returns so far. As for new investors who are looking to enter now, I would like to quote from Star Wars, "The Force is strong in this one, but careful you must be when sensing the future." There is good potential in this theme, but invest in accordance to your risk tolerance and be prepared for turbulence when it comes. This concludes my absolutely biased comments on the VanEck Space Innovators UCITS ETF that has the Bloomberg ticker JEDI, and I hope it will help in your investment journey. May we all grow wiser and prosper.